And what happens when there's societal, economic, financial, political mayhem? Well, investors lose faith and confidence in the issuers of the currency, and they don't want that currency. And that's why I think the war on gold is almost finished. And the charts are telling me this as well. Saturday, July 6th, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at why, in my opinion, the war on gold is almost over. And that's not going to be a good thing if you don't have any. And you can add silver to the equation as well, because I think silver is going to go along for the ride with gold. And it might even outperform gold. But of course, it's a lot more volatile. But what I'm going to focus on today is the war on gold and how actually it's been going on for about 25 years. And we're going to look at a couple of hit pieces by the Financial Times, or the FT, on gold as money. And we're also going to look at why I think the war is almost over. And that has to do, of course, with hyperinflation. I think we're approaching it. And we're going to look at some charts and compare it to what happened in the early 1920s in Germany, and what gold did versus the paper mark, of course, because gold, of course, at the time was, and I would argue still is, the ultimate measure of value and wealth. So many of you know that gold investments, I work with them. In that a few years ago, quite a few years ago now, a lot of the viewers started asking, where can I buy gold? And I recommended them to gold investments. And I did tell them as well to shop around. But I have a relationship with gold investments, not only through the channel, but previously, before I even started this channel. And when I started buying some gold and silver back in 2002 and 3. That's when I started. I went to gold investments to Mike Temple. Mike Temple, of course, he's retired now, but his sons Oliver and Simon are there. And it's interesting because I'm going to show you a couple of articles today and the old editorial that some of you, or a lot of you, know about already. But the other articles are from a quarter of a century ago, almost to the exact day. And I have to thank one of the viewers for sending an old FT from that date, actual physical FT. Chris, thank you very much. And the reason I was talking about gold investments is because, yeah, people like to send me stuff. I don't like giving out my home address, so they send it to gold investments. And once in a while, I visit Oliver and Simon. And I did that recently. And they have stuff for me that comes in the post. And I picked up this that came in the post, and I have to thank Chris again. And it's interesting that we're going to look at this, because the FT back in the weekend of July 10th, July 11th, 1999, so really 25 years ago, was asking the question, is it time to bury gold? And I don't think they meant, is it time to buy gold and bury it in your dirty man's safe? No, I think they meant, is it time that gold is finished, and is it time to bury it as a dead asset? If you're wondering what this is, well, it's one of my affiliates, and I think it is time to bury gold right now, because gold is going to be a lot more precious. So it's one of the ways to keep your valuables safe, dirty men safe. I recommend you look into it. There's a link below in the description of all my videos, and you get a 10% discount and a special gift when you get a Dirty Man safe. And it's not just to protect your gold, but anything that's valuable to you, documents or whatever. But yeah, back to gold investments. So I was coming back on the train from my visit to gold investments last week, and I did read this. Is it time to bury gold? The FT is asking, 1999. We're going to come to the article in a minute, but then there's another article here below. It says private buyers get the runaround, and they're talking about how difficult at the time it was to buy gold for private investors. And it's interesting though that towards the end of the article, it says here, gold investments. A London-based specialist reports increased interest from private investors thanks to the metal's low price. And this doesn't apply anymore because they don't charge 6.5%, but it says it charges 6.5% commission and another 0.75% a year for storage if required. And at the time, there were some gold coins and bars that incurred VAT, but it says here it too sidesteps the VAT problem by buying abroad. So that's the that was the situation. Then of course now it's VAT free. Yeah, as I said, even the storage fee is a lot lower these days. So if you are interested in learning more about gold and how to buy it, how to store it, or how to keep it, there's no better place than Gold Investments to contact, in my opinion. And again, all the details are below in the description. So as you can see, they've been around since 1981. And yeah, the FT was going to Gold Investments to ask them about the retail market. So many of you already know about this editorial that, and I've spoken about it umpteenth times here on the channel. And this was back in 2004 when gold was at $400 and the FT was trying to denigrate gold. They said it was going gold. The pointlessness of holding bullion continues to sink in. April 16th, 2004. So you can pause the video and read this, take a screenshot. I'm not going to go through it. So 1999, what was happening in 1999 that made the FT put a whole page in its money section on the weekend to ask the question, is it time to bury gold? Well, it was because Gordon Brown, the then Labor Chancellor, was dishoarding half of the country's gold reserves at rock bottom prices. Yes, in hindsight, they were rock bottom prices, but they were asking the question, how much further down could it go or up? But what they say here is that there's a lot of opponents to the sale, people who believed in gold, the so-called gold bugs, which I would say a lot of you on this channel are, and I am as well. And what is it, being a gold bug? Well, I know it's not a very nice term. It's pejorative, but I don't care. I'm proud of it, because being a gold bug is someone who believes in honest weights and measures, because that's what money should be. It should be honest. It shouldn't be just an empty promise that can be created out of thin air and forced upon the public by legal tender laws. But anyway, let's go through this article. It's the weekend. The weather isn't that great. So you might have a bit more time to go through this or to listen to me. So it says opponents have condemned this week's gold sale by the Bank of England. Well, it's not really. The Bank of England was just acting on behalf of the UK Treasury. So that in itself is not completely right. But anyway, let's continue. Disaster, slump, crisis, the sound and fury that accompanied this week's gold auction may have suggested that the end of the world was just around the corner. But consider a few facts. On Tuesday, the Bank of England sold 25 tons at close to the market price, about the quantity the South African miners ship in a fortnight. So far this year, the price of gold has fallen from $288 to around $258 an ounce, a drop of 10.5%. Over the same period, the euro has fallen by almost 13% against the dollar, or look at the FTSE 100 index, that bulwark of solid investment. Since the start of this year, 13 of the FTSE 100 FTSE companies have fallen by more than 10.5%. They include household names such as Marks and Spencer, Sainsbury's, and Lego in general. There has, however, been no wave of popular outrage. No petitions to Downing Street, no talk of crises. A fall of 10% over 6 months is not unusual in financial markets. There are several reasons for this disproportionate fuss made about the gold auction and the price fall. The metal's changing role has created real uncertainty about where the price is likely to end up. It has been in intermittent decline for nearly 20 years, and falling prices tend to breed paranoia and conspiracy theories. The bank's auction has been a convenient whipping boy, and the pro-gold lobbyists have become unusually vocal and aggressive. Well, at the time, I wasn't really into gold. I wasn't a gold bug. The only gold I had was my wedding ring that I still have, of course. It's white gold, 18 karat. And I was working in the city of London in the bond markets. Gold was not even a thought to me, but let's continue. Gold is a metal in transition. It no longer has an official role as money, but it is not yet a simple commodity. Like most fundamental changes, this one is creating a lot of uncertainty, price volatility, and worry, particularly in the countries and businesses built up around the old certainties. It could take several years before the confusion clears and a new landscape emerges, and no one can predict confidently what that landscape will look like. The beginning of the end of gold as money occurred in stages. Until 1968, the official price was pegged at $35 an ounce. Then came a brief two-tier market which collapsed along with the Bretton Woods system of fixed exchange rates. Well, of course, we've spoken a lot about this here. The reason it collapsed was not because there was something wrong with gold, is because the US government just overspent, ran huge deficits for the Vietnam War and other Lyndon Johnson big society programs. In 1975, the US allowed its citizens to own gold, and in the second half of the 1970s, both the IMF and the US sold substantial quantities using the auction mechanism. So governments and central banks, which had been big buyers of gold throughout history, became sellers. And why do they become sellers? Well, because they're trying to keep the price down. the price from rising too quickly. And this is what we're going to talk about later once I'm finished with this article, and why I think the war on gold that started really in the mid 70s, as you can see here, is almost over. The metal was allowed to find its own price level, and speculative investment funds have become important players in the market. At present, demand exceeds annual mine production, but there's so much of the stuff already above ground, mainly in jewelry, central bank vaults, and private hoards, that normal supply-demand sums are inappropriate. In the late 1970s, the bullion price surged, reaching an all-time peak of $850 an ounce in 1980, thanks to pent-up demand, the second oil shock, several currency crises, wars and near wars, stagflation, and other little worries that made the yellow metal look a safe haven. Right? They're always putting gold down, FT. Against that background, all that the IMF and US gold auctions did was stop the price rising even higher. There you go. No price manipulation. While the FT is admitting it back in 1999 about what the IMF and the US Treasury did. And why would they want to stop the price from rising even higher? Well, because it's the canary in the coal mine, or a barometer that tells that the dollar is losing value. And what they do is they sell gold and lease it or sell it to keep the price down. It has been a more sober story thereafter. In the 1980s, the collapse of the dollar or a sudden crisis such as the 1987 stock market crash would at least send people scurrying into gold temporarily. Recently, neither the collapse of large parts of Asia nor that of long-term capital management, the hedge funds manager, provoked so much as a blip. Miners have tended to blame the falling price on the series of sales by central banks and the fear of more to come. Some analysts point out that the growth in holdings of other types of investments, including derivatives, have simply marginalized gold. Others argue that the miners are as much to blame as the bankers. Nowadays, most gold miners hedge against metal price falls by selling forward. They have also shown a generic reluctance to curb production in the face of falling prices, partly because some types of mines are difficult to operate on a stop-go basis, and partly because hedging operations in many cases a weak currency have cushioned the impact of the price fall. This year, the Bank of England's pre-announced auctions have given the industry a handy scapegoat. Britain is not a big gold owner. It scrapes into the top 10 just ahead of Portugal. Its planned disposal of 415 tons in total over the next few years is substantially less than the 1,300 tons Switzerland plans to sell. The main reason this rather small auction received so much publicity was the unusual amount of high-profile opposition. The World Gold Council, a lobby group funded by some of the large gold mining companies, has attacked both the UK sale and the IMF's planned disposal of 300 tons. It has organized a hold on to our gold campaign and delivered a petition to Downing Street. Several African politicians have accused the UK and IMF of damaging their economies and putting miners out of work And 6 leading mining companies have written an open letter to the Prime Minister asking him to deny or investigate rumors that the bank's real motive for gold sale is to save the bacon of firms that are running short positions. Wow, I've spoken about this before, and I actually didn't have any proof that it was a real thing, but it's here in the FT, and I think Goldman Sachs was one of those firms, of course. The only lobby group that has remained reasonably level-headed is the Australian Gold Council, which emphasized the puny dimensions of the bank sale. Otherwise, it has been all good, clean hysteria, a modern witch hunt. The effect could well be to scare any remaining investors out of gold. But even contrary thinkers will have to search hard to find any positive reason for buying gold now. Yes, there will always be buyers of gold at some level. It is attractive, it has some industrial uses, and arouses near religious fervor in its enthusiasts. However, the metal has been in a bear market for the past 4 years. Indeed, some would argue that the real down wave began in 1980. Well, that's true. Short term, even many of gold's friends agree that if it makes any decisive move, it is more likely to be down than up. Longer term, it is not at all clear at what level the price will find new equilibrium. So there you go. And there's another article in here by someone called John Plender. So there you go. He says oil fights back as gold falters. And this is what he says here at the end. I'm not going to go through the whole thing. He says, where gold is concerned, the absence of any income makes judgment about the price as speculative as the metal itself. Note how they talk about gold as being a speculative commodity, right? It's anything but. And we're going to see why in a minute. All that can be said with certainty is that the rise in bond yields this year has increased the opportunity cost of holding an investment that yields no income. And with global economic activity strengthening, it would not be surprising if bond yields rise further this year. There are more gold reserves for central banks to sell to shell-shocked gold bugs. But no matter, gold bugs, like the poor, are always with us. Well, he was right about that. But I think gold bugs, ever since he wrote that 25 years ago, they've become a lot less poor, and that's what we're going to look at. And it's interesting, isn't it, that these articles, because this was a big piece. It was the weekend part of money. It was the major story, and basically trying to push investors into not really going into gold, saying it was very speculative and dangerous and volatile, and denigrating all people that have something good to say about gold. And they did the same thing in 2004 when gold was at 400. And it looks like this weekend they're doing the same thing. They've got a big article here. India's passion for gold fades as price hover near record high. So I haven't read this, but just the headline there will make people think, oh, India's not buying gold anymore. Price is near record high. I'm not going to, protect myself, my savings with gold. So yes, we're going to look at why I think the war on gold, that the FT is one of the major, I would say, combatants against gold, and people like us who value gold for its monetary qualities, I want to show you the chart of gold going back to around the mid-90s, because it's really interesting. This article was, this was the weekend FT on July 10th, July 11th, 1999, as you can see here. So virtually a quarter of a century ago. And bar chart actually has the low on this chart, the low for gold, as being August 1999. So a month later, gold bottomed and has never seen that price again in the last 25 years. And that price was a low of $252, as you can see here. So, as I said, I think it was time to bury gold, literally, if you had some, to keep it safe. And I think it's still time to bury it now with your Dirty Man Safe. Dirty Man Safe wasn't around 25 years ago. So I think the FT was wrong, of course, because they meant it as a pun, bury it as an investment or a mode of savings. And notice, like they always use the fact that gold doesn't pay any interest. Well, and that higher bond yields are bad for gold. But as we've seen since 2021, bond yields have gone from below 1%, sometimes even negative, to around 4 or 5% now. And despite that, gold has kept going up. And why is that happening? And here I'm going to cover a bit more why the war on gold is almost over. Well, the reason why I think this is happening is that investors and even central bankers, especially central bankers from outside the G7, from the Western world, are realizing that the current post-Bretton Woods monetary system, the dollar standard, or the petrodollar, if you want to call it, is on its last legs. And why is it on its last legs? Well, because under a fiat currency system that doesn't have an anchor to the monetary system, like a gold standard or just a plain gold-backed system or silver-backed system, bimetallic, it's very easy for governments and central banks just to print the money, borrow the money, especially when you've done like over a decade of money printing or QE, trillions of dollars to keep interest rates low. How do they do that? Well, the central banks create reserves out of thin air, which is called really money out of thin air, to buy government bonds. When you buy government bonds, it raises the prices and the yields go down. So you can keep you can keep people that are in debt refinancing, and you can keep the Ponzi going. It's a debt-based system, but now we're coming to a point where there's so much debt that they can't stop. And the problem with that is that we've seen in the last couple of years that bond yields are rising, and they're going to continue to rise. And why is that? Well, because the rest of the world is gone off buying U.S. treasuries, because the United States, not just the current administration, but the previous administrations, have used the dollar as a weapon. So there's a lot less demand for U.S. debt, and there will be a lot less demand for U.K. debt and EU debt, and that's why I think the war on gold is almost over. And we're seeing that central banks like the Bank of China, People's Bank of China, the Indian central banks, the Russians, and many others have been buying gold hand over fist since 2022 because they know what's coming. They can see the collapse of the currencies. And why are the currencies going to collapse? Well, and I'm not bragging here, but I knew that this was going to happen over 20 years ago because I read this book here, Fiat Money, Inflation in France, how it came, what it brought, and how it ended. And I could see the seeds of what happened in post-revolutionary France back in the early 2000s. I also recommend When Money Dies by Adam Ferguson about the Weimar hyperinflation. I read this as well over 20 years ago, and I could see the seeds being planted, and I think we're almost there. I can't tell you exactly when the currency collapse is going to come about, but one thing's for sure. If you're one day late protecting your savings, and by protecting your savings, I mean getting out of Dodge, getting out of fiat currencies, one day late will be too late. It's better to be a year or 2 years or 6 months or a week early. And I'm seeing a lot of symptoms, not just on the charts of gold or on the about the debt and the deficit spending, the inflation. I'm seeing societal mayhem, and I'm sure you're also seeing that, aren't you? Political mayhem, division, lawfare in the U.S., all kinds of crazy things going on politically, not just in the U.S. but in the U.K. What's happened in the last 4 years, where they locked us all up. People are getting angry, and the same thing happened in these two periods. And I highly recommend these two books. You might be able to. Well, there is a free PDF for this one. I'll put it in the description. I don't think there's a free PDF for this. And what happens when there's societal, economic, financial, political mayhem? Well, investors lose faith and confidence in the issuers of the currency, and they don't want that currency. And that's why I think the war on gold is almost finished. And the charts are telling me this as well, especially this long-term chart that I showed you with the low in 1999. And why? Well, because we've broken out of that, it was kind of a triple, almost quadruple top that gold made from August 2020 to, when was it that we broke that? Well, it was early this year, February and March. Actually, at March, we definitively broke through there. So let's compare the chart from the last 25 years to what happened to the value of one gold mark and paper marks back in the 1920s. And they look very similar, as you can see here. There's a top just about above 10 paper marks in the beginning of 1920. And then there's consolidation up until, the end of 1921. Then it breaks out. Then it comes back down, and then consolidates a little more. And in the middle of 2022, it takes off. And this chart, of course, is a logarithmic chart. But you can see that we went from under 100 paper marks to over a trillion in a matter of a year or even less. And that's the hyperinflation. And I think we are very near that point, this phase transition when it takes off. Am I saying we're going to see $1 trillion gold price? Maybe not. We might get to 10,000 or 100,000, and then the whole system will implode, and they'll try to come back and say we need to go back to gold. And why am I saying that? Well, because even the Dutch central bankers are admitting that. Back in May of 2023, the Dutch central bank said, gold is the ultimate anchor of trust. If the entire financial system collapses, you still have the gold, and the gold retains its value. So the central bankers know it. Why don't they tell the public about this? Well, because they don't want you to protect yourself financially. So it's interesting how this chart of gold marks and paper marks is very similar to what's been happening since 2011. Of course, it's on a bigger time scale, longer time scale. You can see that we made the top there just above 1900, which to me corresponds to that top just above 10 in the beginning of 2020. And the consolidation then took about 2 years. But here in present day modern world, it took about 10 years. So yeah, it's called a fractal, but I think the same will happen. And I think that's why we are near the end of the war on gold, because they've lost the war. Fiat currency, central banks, they've lost the war. And I think it's going to reflect itself very soon with a ballooning or rocketing, not ballooning, but rocketing price of gold. And silver, for that matter. Silver will be even crazier. And I think having some physical gold and silver will go a very long way. And by that, of course, I don't mean having ETFs and futures. That's a big mistake. Again, if you want to find out how to keep your gold safe, contact Gold Investments here in the UK. For the US, my US viewers, you can contact Miles Franklin and tell him Monaco64 or Mario sent you. They'll let you know what they can do for you. They can store it or ship it to you. They can even put it into an IRA. But I'm not too sure whether you want to put it into IRA or a SIP here in the UK. I think having it outside any financial construct is the best thing. So that's why I think the war on gold is almost over. And if you don't have any or any silver, you will regret it big time, in my opinion. With that, I'm going to wish you all a very good weekend. Take care. Bye.